the March IIP data is out, and this is exactly in line with the ET poll. March IIP data for is at 2.5%. ET poll also indicated pretty much the same number. Let me quickly capture the immediate reaction of that number on benchmark indices. Sensex still holding on, Nifty also holding on, and the bank Nifty of course has not changed. Let's look at the BSE Capital Good Index as well, because IIP data surely will have an impact on the consumer, on the machinery category, on the consumer spending part as well. So the BSE Capital Good Index is up 29 points. Nothing is happening there. The first reaction from equities is that they are completely treating the March IIP data as more like an event. Maithili, on expected lines, one would argue.
Well, absolutely. In fact, I think it's positive. Maybe it's taking some time for the market to digest this, and particularly look at manufacturing data. Manufacturing data is over 3%, and that's a huge positive, because for most companies, it is a manufacturing data which holds a great deal of key to the success and the prosperity of the Indian economy. Remember, manufacturing does well, then employment does well, and then the economy also does well. And we're seeing a 3.2% growth in manufacturing versus just 2.2% last year. Of course, here again, we have the base effect of last year, but even so, I would look at it as a strong positive. And I'd like to go over to Dr. Rangarajan, who I think is waiting for us on the phone. Dr. Rangarajan, are you pleasantly surprised by the numbers that we've seen, and how optimistic are you now that your projections, rather than the Reserve Bank of India's projection of GDP growth, will be realized if this is part of a longer trend?
I think the indications were that the economy had reached the bottom and it is picking up. But now we have a third month in a row in which the manufacturing growth has been positive. It was a bit disconcerting that earlier on there were several months in which the manufacturing growth was negative. So it is reassuring. It's a welcome sign, and perhaps the full impact of the various measures taken in the second half of last fiscal should be felt during the current year. And we should see further pickup in manufacturing and industrial growth in the coming months.
One more question, sir. We've seen improvement in capital goods, improvement in mining, as well as electricity. So would you think the infrastructure sector, which has really been one of the Achilles heel for us, would there be some kind of improvement in the infrastructure sector too?
Well, it can. I mean, see, one of the points that we had made in the review was that despite several factors, the investment rate continues to remain